Perfect. Uh, Good morning, Bruno.
Hey Nick, how are you?
Morning's new.
Good.
Good. We're back for another episode of PLA. We're gonna do two questions today. I'll start with your question for this morning, Bruno, and you are going to touch today on securities, and specifically with regards to mortgage bonds. So, mortgage bonds as a form of security. What are the rights? What are the obligations? What exactly can you use this thing for?
So what is a mortgage bond and what does it have to do with loans and property? How does it work? So bonds are a form of security, right? What is security? So all security means is that if someone is giving money, they want to make sure they can get the money back. And in order to be able to get the money back, sometimes they ask for certain things. So things like suretyships count, cessions of some form of right or another, and mortgage bonds. Now, a mortgage bond gets registered against a property at the deeds office. Because it's registered at the deeds office, it means that that property cannot be transferred to anyone else without that mortgage bond being. And that's the element of security. It basically allows a bank, for example, but anyone, it can also be a private individual, but it allows them to refuse to allow a transfer to take place until they've received all their money back from whatever debt has been incurred. So that is a mortgage bond, and that is how the security actually arises. No one can do anything without cancelling the mortgage bond. Now, how do mortgage bonds typically work? Well, you find with the retail banks, or most banks for that matter, when financing the acquisition of any property or the refinancing any property, a mortgage bond is registered in order to secure the repayment of that amount of money. Right? This is common practice, and this is usually in addition to any suretyships that they might also have you sign. Now, a lot of people then come to us and ask, all right, can I take over that person's mortgage bond, right? Or can I move the property somewhere else, maybe to a company or into a trust, and simply move the mortgage bond? So remember, the mortgage bond is tied to the loan itself. And although these are two different legal arrangements, a loan being I give you money, you pay back money over a period of time, and a mortgage bond simply securing the repayment of money, they are tied intrinsically. Meaning that if a person were to want to take over somebody else's bond, they couldn't do so under our South African legislation because a lender is specifically lending to an individual. In terms of the National Credit Act, that individual needs to be properly vetted. It can't be reckless lending. There's a whole range of things that go behind the actual lending of money, meaning that once the money goes out and it goes into that person's or for the acquisition of the property, that mortgage bond is tied against that specific loan agreement. So when we speak about taking over mortgage bonds, the reality behind it in practice, if you're moving a property from your name, for example, into one of your companies, no one is taking over a mortgage bond. No one is moving a mortgage bond. You are canceling your current mortgage and you're applying for a new mortgage through that company. Similarly, if you're entering into a transaction with a seller and you guys speak about taking over their bond, yes, you're paying that bond off on a monthly basis, absolutely, but that bond is not in, it has nothing to do with you. Until you take transfer of the property, that bond is connected to the loan agreement that is connected to the seller. So your repayment of that loan agreement actually brings down the seller's loan, not your loan. And we use this a lot in installment sale agreements, where in our law, under the Alienation of Land Act, the person paying the purchase price off is actually entitled to get information from the bondholder on how much has been paid, how much is up, and statements. All the payments that have been made, they're actually entitled to pay off this bond, but that doesn't mean you're taking over the bond. This just means you're paying off somebody else's debt so that you can reduce the purchase price so that you can eventually take transfer of this property. So please don't ever confuse the loan itself with the mortgage bond and the ability of this mortgage bond to be transferred between individuals.
Thank you, Bruno.